Hi everybody, this is Lara with your end of the week video for gold for the trading week ending Friday, 4th of February. An inside week leaves the Elliott Wave analysis exactly the same as last week. I'm still expecting a breakout from this big triangle sooner rather than later. If we have a new high above 1852.75 by any amount at any time frame, that would add confidence to the first bearish Elliott Wave count, and then a target for an upward breakout would be 2018. It would not be expecting a new all-time high above 2070.78. But if we see a new low below 1759.35, we'll have confidence to the second bullish Elliott Wave count. The target after a downward breakout would then be 1460. A new low below 1303.51 would not be expected. Elliott Wave analysis first, classic analysis last, bearish wave count first. This bearish wave count sees a huge expanded flat correction for a grand supercycle degree 4th wave continuing, with wave B over here, wave C beginning, and wave C may only subdivide as a motive structure, a 5-wave structure, which will be labelled at cycle degree 1, 2, 3, 4, 5. If my degree of labelling here is correct for cycle 1, then cycle 1 has completed as a 5-wave structure. That means supercycle C is unfolding as an impulse and may not be a diagonal, because a diagonal would require all of the subwaves to subdivide as zigzags, and this is not a zigzag. Its impulse for supercycle C would be more likely. And so 1 may be complete within the impulse, and 2 may be continuing higher as a zigzag, to be labelled primary A, B, C. Primary B may have just recently completed as a regular contracting triangle, and now primary C may be underway. The target is primary C to reach equality in length with A at 2018. We can have confidence in this wave count if we see a new high by any amount at any time frame above 1852.75. And cycle 2 may not move beyond the start of 1 above 2070.78. Let's take a look at this wave count at the daily chart level, where the high for intermediate B is this point up here. Here's C, intermediate D, and a brief short little intermediate E. E waves can be pretty short in Elliott wave triangles. If intermediate E continues any further, it may not move beyond the end of C below 1759.35. The rule is absolute, and so the invalidation point is absolute. A new low by any amount at any time frame, prior to upward movement that is. If this happens, then this wave count would probably be discarded. At least the triangle for primary B would be discarded. The target for primary C, 2018. Primary C may only subdivide as a 5-wave motive structure. Most likely it will subdivide as an impulse, and that will be labelled intermediate 1, 2, 3, 4, 5. Within intermediate 1, minor 1 and 2 may be complete. A 3rd wave up may be in its early stages. At the weekly chart level, this is a bullish wave count. This expects the bear market for gold was over in December 2015 at that important low at 1046, and that a bull market began there and will continue. I'm labelling the first impulse up of the bull market supercycle 1, and within it, cycle waves 1 and 2 are complete well off to the left of the chart now. Here's the end of 3, and 4 may be continuing lower as a zigzag that would provide alternation with a double flat as cycle 2. The zigzag is labelled primary A, B, C. This wave count sees primary B as a triangle over here, and now primary C in its early stages. Primary C to reach equality in length with primary wave A at 1460. We can have confidence with a new low below 1759.35. Within primary C, no second wave correction may move beyond its start above 1852.75. This rule is absolute, so this invalidation point also is absolute. Primary C would be very likely to move at least slightly below the end of it, primary A at 1677.64 to avoid a truncation. At the daily chart level, here's the end of C, D and E within that triangle for primary B, and the start of primary C with a minor 1, minor 2 could be complete, but it could move higher. If it does, it may not move beyond the start of 1 above 1852.75. Target the same. Requirement or expectation to end below 1677.64 the same. At the weekly chart level, this is a very bullish wave count. It has a really low probability. What if cycle 4 was over here as a triple zigzag, meets all Elliott wave rules? Is not a rare structure, but it's not common. But we have to consider this possibility because the subdivisions fit so well. If 4 is over there, then 5 would have begun with primary 1 and 2 complete, intermediate 1 and 2 complete, minor 1 and 2 complete. This wave count expects a third wave at minor, intermediate and primary degree is in its early stages. That should be seeing an increase in upward momentum with support from volume. That's just not what's happening. And so this wave count doesn't have support from classic analysis. It will be finally discarded below 1722.02 because minor 2 may not move beyond the start of 1. Let's take a look at classic analysis this week, and the situation after an inside week really hasn't changed. There may be one of two kinds of triangle unfolding here, either a symmetrical triangle with the resistance line along here, along 1, 2, 3, and now almost 4 points, the support line along here and again tested for the last couple of weeks, or it could be a descending triangle if the support line is drawn along these 3 lows down here. Either way, it looks like a triangle may be unfolding, and we're getting really close to the apex, so we should be expecting a breakout sooner rather than later now. An upward breakout requires support from volume. Price must close above the resistance line on an upward session with support from volume for confidence. A downward breakout doesn't necessarily need support from volume. If we get a downward breakout below the symmetrical triangle trend line, I'll still also be looking for support when price gets down to 1675 and also considering a descending triangle. I'll probably have 2 classic analysis targets for you if that happens. If we get an upward breakout, I'll have an upward target for you. We don't have a breakout yet. No signal from on-balance volume. An inside week closing with weaker volume, or actually it hasn't quite closed yet, but it looks like it will close with weaker volume. RSI neutral, stochastics neutral, ATR declining and ADX indicating no clear trend, all normal behaviour for a consolidating market, and gold has been consolidating for over a year now. This has been really testing patience, hasn't it? It's a really difficult market to analyse when it's in a huge consolidation like this. An upward swing within the triangle fell a little bit short of the resistance line. A downward swing fell ever so slightly short of support. We may be seeing another upward swing, but because price is getting close to the apex of the triangle, we'd be expecting a breakout coming quite soon now. And goodness, hopefully another 1 or 2 weeks. It could be a bit longer. It could still draw itself out, but it is coming sooner rather than later now. A downward session for Thursday with a long lower wick. Would be expecting upward movement for Friday. On balance volume broke below support here. This is the strongest signal on either of these technical analysis charts. Give it quite a lot of weight. The break below support, test of resistance at price support. This is bearish. This supports the bullish Elliott wave count, which perversely expects a downward breakout from that triangle to complete that huge zigzag lower before the bull market for gold resumes. So if this is correct, then the bullish wave count may be more likely than bearish. We don't have a breakout from price yet though. ADX is below 15, too low to indicate a trend at this time frame, as well as weekly. RSI and stochastics neutral, ATR overall flat as price moves sideways within the triangle. That's all from me again with your gold analysis this week. I hope all our members are looking forward to an awesome weekend.